Game Trader Live is a special edition. We got a bunch of earnings coming out. We had earnings come out earlier today, and we're going to have more dropping shortly. Let's see what's going on in the world of finance. Facebook and Microsoft are two of the companies we're paying close attention to in after hours. Could pull up the chart. There we go. Oh, that's the Nintendo chart. I wonder why I'm looking at that every day. Here's the meta chart. Let's look after hours. 1 minute chart. There we go. So I don't think Microsoft or Meta are out with numbers yet, but we'll be here to react when they do drop, and you get to see a little bit behind the scenes of how we come up with headlines on the fly. So thanks for tuning in. At 5 p.m., I'll start streaming the Facebook Meta conference call here on Twitch. We're also going to be streaming the Microsoft conference call on our YouTube channel. So if you're into either of those companies, you can stick around for that. Obviously, we're going to be breaking out some news stories as the news breaks here. Who do I got with me here? I got Ozzy, Bill, Sam, and Donovan. Wow, we got a full house here. Hey. I might do the unthinkable and try and move my mic closer to myself. See how that works. There you go. Probably sounds better now. Hey there. Let's see. We got some... Oh, it looks like something's going on. Qualcomm's out with numbers. Yeah. We're not streaming their call, but you know, they're a large supplier for Android phones, so we pay attention to them. So they missed their Whisper number. They beat on revenue. They beat the analyst expectations. Okay. Well, Meta is moving like the numbers are out. Yep, there they are. Meta numbers are out. Facebook reports a beat. Another massive beat. My God. Yeah, they beat on the top and the bottom line at Meta. Okay, let's get some headlines written. Okay. We still call them Facebook on our website because Meta is a stupid name for a company. Q1 2025 earnings results beat. Okay, who wants to grab this Facebook story? Okay, so underneath that, Dom, I'm just giving you that's what was expected. And then the actual EPS of 643. That's a material beat. And with the economy where it is, it's surprising to see them beating on revenue as well. But they did. So there are your comps, Donovan. Basically, analysts were expecting $5.22 a share in earnings per share. Facebook reported $6.43. That's a massive beat. And then expectations for revenue were $41.27 billion. They came in at $42.3 billion. So $1 billion beat on the top line. And a material beat on the bottom line as well. So let's see. Meta Investor Relations. Let's see what they got. We got to go to our favorite metric, right? who wants to write about how much they lost at Meta Reality Labs. I mean, if they stop losing money, maybe I'll stop writing about how they lose money. But until that happens, I'm not gonna do it. Okay, Reality Labs. They lost $4.2 billion. Okay. Sorry, we're focused on the Facebook earnings, but I'll get back around to Qualcomm here in a second. Okay, so I'm just copying a headline from the past and just repurposing it for this. Let's see, how much was the loss this time? 4.21. So slightly better, I guess. Okay, we got that one out the door, or the headline at least. That is indeed worse than they did last year. Who's grabbing that Meta? Ozzy, you're on the Reality Labs. I just put a screenshot of the press release. So yeah, the stock's moving up in after hours, as it should. I mean, as a beat on top and bottom. I was searching to see if they mentioned tariffs. They lowered their total expenses, but they increased their capital expenditure guidance. That's actually worth breaking out. Microsoft's out with numbers. Something like that. Meta increases 2025 capital expenditure outlook on additional data center investments. Okay, Sam, you're on that. Cool. Okay, let's see what Microsoft's doing. I'll get the Microsoft chart up for the folks at home. Yeah, it looks like they're pretty happy with the Microsoft numbers. I haven't seen the press release yet. Microsoft. Q. Okay. 70.1 billion in revenue. That's a beat. And earnings per share of 346. That's a beat. Xbox content and services revenue increased 8%. We can get to that here in a second. Yeah, let's write this Microsoft headline. Where did it go? Okay, so They got a wonky fiscal year, right? This was Q3. Okay, so that's a Microsoft beat. Okay. So yeah, those were the expectations. Actual revenue. 70.1 billion. Just crazy the numbers we're talking about these days. And yeah, 346. Okay. Okay, that's one Microsoft headline. We could probably hit this Xbox story and see if there's anything else in there. Can you guys remember the last time they actually disclosed, like, unit sales of a game? Isn't that weird? Yeah, we should probably see if Microsoft mentions tariffs. I have noticed, yeah, they're not... Neither Microsoft nor Facebook mentioned the word tariff in their press release. I wonder if that Bezos kerfuffle from a few days ago had something to do with that. Man, the list of, like... You know how whenever a company's like, oh, these are forward-looking statements and they're subject to change or whatever? The list of possible uncertainties for Microsoft is like a full page. It's kind of wild. I guess, you know, you gotta cover your ass, right? We'll see if they said anything else about Xbox. This is kind of consistent with what we've seen from tech so far. You know, in Taiwan Semi and some of the other companies. I think we were whoever else we were covering last week. Especially the online companies. Google, they beat. Netflix beat. It's not surprising to see Facebook beating here. But, like, the ad revenue from, like, those Chinese OEMs, that's all drying up now. Because, like, I can't remember if we were talking about it on a podcast or a show or just on our on our staff call, but, like, the, like, Temu and Shein prices are all going up by, like, 150%. Yep. I was like... I remember we wrote something about Razer kind of slowing down orders. I like went on their website to build one of their top of the line laptops, and it was like $4,800. I think that's high for them relative to where they normally are. But they were still delivering, which I thought was interesting. Okay. Let's see what I can get out of the Qualcomm story. Facebook reports there were 3.43 billion daily active people on their family of apps. That's up 6% from the prior year. And Messenger, right? That's like a separate app now, right? I'm sure they consider it that way. But yeah, you got Meta up, Microsoft up, Qualcomm down. Huh. What's going on here? Not related to our coverage universe, but Norwegian Cruise Lines is down. On uncertain future. That's not their symbol. It's NCLH. Oof. 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 Yikes. I don't think I would ever buy a cruise line stock. I'm gonna throw it out there. Speaking of stocks you shouldn't buy. Denny's. Hanging on for dear life down there. Trading for $3.60. But I was distracted. Let's go back to Qualcomm. Doesn't Microsoft have like a yeah, they have a slideshow presentation too. PowerPoint. Their cloud revenue was up 20% year over year. That's kind of all they care about. Xbox got one sentence on one slide so far. And it's the exact same sentence from the press release. Oh, there it is again. They've basically lapped the one-time benefit of the Activision Blizzard acquisition. So it's like they're not. You know, remember last year they were growing like 60% year over year. They're back to single-digit growth now. Okay, well we got slightly. Here's a question for you guys. They break out gaming revenue separately from Xbox revenue. What do you think that's all about? Cloud gaming, or maybe like Dom, you're saying like, but it's still Xbox publishing games on Sony, right? Well, it's like Xbox content and services revenue. So that's Game Pass, Call of Duty, Minecraft, their first party stuff. Xbox hardware is a thing, but then they have gaming revenue. That's got to be Xbox because it's published by Xbox. That's, you know what I'm saying? Like, I don't know. That would be, if they ever gave us any information about their finances at Xbox, that would be a good question to ask. Because, like, are they just starting to view this as gaming, not Xbox? And, like, because Xbox hardware is the third line item there. And I threw it in Slack. But, I don't know if we want to focus on just. Yeah, I'm not sure which segment we want to report on there. Okay, I got a little bit of a nuance for the Qualcomm headline because they missed their whisper number, but they did beat analyst estimates. I think that's why the stock's coming in a little bit in after hours. Q2. Whoops. So those were the expectations, and then the actual let's see who is on that. Aussie. So yeah, it's the actual numbers are down there. It's just important to note that they missed the loftier whisper number expectation, and that could be why the stock is struggling in after hours. You guys seen any of the video of like Las Vegas's airport lately? Apparently MGM is laying off a ton of people because like no foreigners are coming to Vegas anymore. You know, just tourism in general in the United States is not really too hot right now. But like a city like Vegas is going to be adversely impacted by stuff like that. Microsoft's at $4.20 per share. I'm sure Bill Gates is blazing it. I should get you guys some screenshots, huh? I think a 15-minute chart will be good for this. Really highlights the pukage in Qualcomm and after hours. I'm just dumping them in the screenshots channel. God damn, that was a huge bump for Microsoft. It went up 6% in 15 minutes. That's a lot of Zunes. Donovan, did you ever have a Zune? What kind of iPod? Was it like the long one though? I had the clip-on one, like almost like a postage stamp. That Shuffle, like the next gen Shuffle was, I think it's still my favorite Apple product ever. Like, that was back in the day, like, where you had to make playlists and stuff. Because, you're right, there was no screen, so you would just hit different button combinations to trigger your next playlist. But it was, like, minimal, and battery life was outstanding. Bill, Nintendo up again today? You know, I know we're not covering Nintendo earnings today, but you know, that's a good looking chart. We'll talk about this later. Wow, that's a chart right there. Let's talk about more boring companies. Microsoft, outside month to the upside on the last day of the month. That's going to be interesting to watch next month. God, these, like, the only thing I'm concerned about is, like, we're getting all these outside months. And in this case, you're getting a reversal. Man, Facebook might be a buy. Just on the chart. I'm not running out here telling people to invest in Facebook, but let's see, Qualcomm's down on the year. Semiconductors have had a rough year. Semiconductor ETF is looking interesting. Wow. If China and the United States can, like, somehow fix everything that's been busted, yeah, the market could probably go higher, but I think they're pricing in some optimism about that. Let's see. We should break out that Xbox. I'm not sure which one to break out. I think just Microsoft gaming revenue. That's probably the broadest way that they refer to things now. It's probably going to be the metric that, if they're listing it, that's probably what we should be paying attention to. Let's see. This is Q3F. What did it grow at? 5%. Since none of them mentioned tariffs in their press releases, I imagine that some analysts will ask about it, and that might be the breakout that we get from some of these. Yeah. Whenever you hear Microsoft shutting down a studio, just remind yourself, and you know what, we should break this out. I think we're getting pretty good at reporting on buybacks. We should probably continue it. They returned $9.7 billion to shareholders in the form of dividends and share repurchases just in a quarter. But no, Donovan, they had to fire people. They had to shut down studios. Like, the state of buybacks in America right now, it's like they really don't have a better... There's nothing better they can do with this money. Really? Like, maybe you don't need that much money. Wow, 48 months in a row. Thank you. Thank you for the 48 months in a row of Jeff Bezos' money. Yeah, I got the charts for you guys. I think that gaming revenue is probably... I mean, we could talk about Xbox hardware being down, but that's just like... At this point, it just seems like that's always the case. Yeah, I think that's the way they handle it, Bill. Like, it's not... no offense to the Xbox folks, but yeah, it's just not... It's not the story right now. Hasn't been for a while. It'd be neat if one of the largest companies on Earth actually told you how many units of their product they sold. I mean, we get it from Sony. We get it from Nintendo. Like, you know, their two largest competitors in the space. Sorry, I have this semiconductor ETF up on the screen right now. We'll go back to Meta's chart. Outside data, the upside. Yeah, this is just like, it's like volatility is what we're seeing here. When you see like, this is a perfect example of like a rev strat day. So you had Meta on Monday traded within that range. Tuesday it traded inside of Monday's range, and then today it broke down below it only to go back above it. So there is an active buy signal right now in Meta above 5.56 and 57 cents. Oh goody. Amazon put out a press release saying they're going to spend $4 billion by the end of 2026 expanding deliveries in rural America. You guys are getting your summer of Jeff plans all planned out. Nice. See, anything else going on in the world of finance? Yeah, you know, CNBC's pointing out the cloud business at Microsoft. That's not really what we focus on. Oh, okay. Ozzy, you're on the Qualcomm story, right? I got a little tidbit from the CNBC reporting. They said that their guidance is light. Let me see if I can find the exact paragraph for you. They also mentioned tariffs. Okay, yeah, here it is. We can source CNBC for this. I'm just going to put it in the news channel, Ozzy. So that's just like what was expected of their guidance for the next quarter and what they reported. And that's where we got that from. But yeah, it's just another reason why the stock is down in after hours. Because they did beat. Now, if we want to, we could break out this. Yeah, they didn't really stay a whole lot. It almost sounds like that South Park episode of Navigating the American Healthcare System. They're like, the CEO in a statement said that Qualcomm was navigating the current macroeconomic and trade environment. Yeah, I don't think there's enough. I think just the story you got, Ozzy, you can just add some color to it. We don't need to do another one. I do think we should write about this buyback and Microsoft being awful. I'm not character counting, so this might be long, but I think that's a good headline. We could always just use an ampersand if we need to shorten it. It's short enough. It's 98 characters. Okay, we got a couple of Microsoft headlines there. Like pirates on the high seas. Yar. RM Squires, wow. That's a name I haven't seen since the last time I streamed. Yeah. Yep. Thank you for the 37 months of Jeff Bezos' money, Mamu Bear. And the Shackverse. I see TJ liked our Facebook Reality Labs post. It's like you could set your watch by Shacknews writing about Facebook losing billions of dollars on VR. It's been 3 months. I like the end of the fiscal year where we get to write about how much they lost in the whole year. It's definitely a bigger number. Let's see. I don't think I see anything else crazy from this Microsoft report. I'm going to go back to Meta, see if there's anything there for us. Yeah, that's an outside day to the upside in Meta. Let's see if Microsoft has anything technically. Yeah, same thing. Outside day to the upside. The only difference is, like, Meta was a little bit more of a coiled spring because of the inside day. So you have a rev strat instead of just an outside day to the upside. Either way, it's good for all tech. Yeah, the Qs are gonna have a nice start to the month, right? This is the end of the month, which is why I do why I do this show on the end of the month as I look at monthly charts. So we'll be doing that here after the earnings call for for Facebook. Yeah, regarding like Facebook's VR efforts, I think it's good that they're willing to lose billions of dollars in this space, because without them, the game dev scene in VR would be dead by now. They like all those exclusives and like the way that they finance projects. Like I've talked to a lot of devs about it. They wouldn't even make their games if it weren't for Facebook, paying for the development, essentially, or subsidizing. Yeah. Yeah, the Arkham Shadow game, or that, I think they had like a Medal of Honor game a few years ago. But yeah, it's good that Facebook is pushing things forward, and I do think that they make better products in that space than most other companies, including Apple. Yeah, Mamu Bear has the Ray-Ban Meta glasses, and I think like he uses it because it's like an accessibility feature, having AI on your face. But yeah, it's I think like what they're doing with point of view capture is interesting. I didn't like when they acquired Oculus or Beat Saber, but like they've done a good job supporting Beat Saber all these years. Like that's VR's Tetris, right? But and it's like still going, man. Like there's streamers and all sorts of stuff. Like people are all about, like, it's a niche. Like I think the AI market in the world for like headsets that cost over $500 is probably only like 5 to 10 million people globally. And then you compare that to like the addressable market of like the Switch or an iPhone, and like you're never gonna. I don't think we're ever gonna see VR hit that critical mass. But I do think AR could. It just can't be intrusive. It can't be occlusive. Like you can't be separated when you put on a AR headset, and I think that's where Apple missed with Vision Pro. But yeah, like I think it's good that Facebook's willing to lose money on VR. And I really think that's a Zuckerberg thing. Without him there, they would not be doing that. If it was a bunch of suits making the decisions, I think they would have cut their losses by now. But he really believes in VR and AR and mixed reality and all those things. What are we looking at here? I don't have the files. What files? Greg's trying to use my stream assets on his stream, but I'm like, you're not Game Trader. I'm Game Trader. You can't be Game Trader. I'm Game Trader. I don't even have my assets. I'm bad at that. One of these days, guys, I'm going to have my new graphics, and you guys are going to be super impressed. Last week, when we streamed with Denny, as Denny was driving, we had some good-looking stuff. I ran out of time today, which is kind of a theme of this show. You see the Falcons got fined for the for the Shadur Sanders call? That's pretty messed up. That's messed up. They shouldn't be doing stuff like that. Yeah. We could do the daily active people story. They said ad impressions were up 5% year over year. They only mentioned the economy once. Oh yeah, I don't know if you saw it earlier today, but this is just kind of a macroeconomic statement that I'll make, but the United States GDP decreased in the last quarter by 0.3%. So that means we're halfway into a recession, probably. Yeah. And this is, like, including the panic of people trying to get stuff into America before the tariffs. So the cliff we're about to see is intense. Yeah, imports were up 41% during the first quarter. Yeah, we had growth of GDP in the fourth quarter of 2024. We grew 2.4%. But yeah, analysts were expecting a small gain of 0.4% this last quarter, and it came in at 0.03 decrease. So that's not good. It's not like a super big number yet, so I'm sure some people will scoff at it, but that's what. Yeah, I'm not here cheering for a recession or anything. I'm just here paying attention to the data. This is the definition of a recession is 2 consecutive quarters of negative GDP growth, or shrinkage of GDP, but also an increase in unemployment in that time. I don't know if we've seen I don't think we've seen that yet. We're just gonna have to watch. The data on unemployment's it's murky, but the job listings are down. I saw that. Like, job listings came in less than expected. The problem with jobs data is it's backwards looking. Things like the price of commodities are more forward looking. So like if you look at the price of oil right now, that should give people pause. Also, like, weird stuff like dry shipping traffic. Like, I don't know if you've been over by Long Beach Harbor, the port of Los Angeles lately, Ozzy, but like apparently it's the deadest it's been since like
spring of 2020. Yeah, and those are the two largest ports on the West Coast where a lot of Chinese goods would normally come. So yeah, I think we're gonna witness this cascading thing. I don't know exactly what it's gonna look like yet, but there's a whatever's being made in China. Everyone who sells that here in America has now had to make the decision of if they're going to take delivery or not. And then I think that's like if this is right, and the 41% increase in imports last quarter, they're all stockpiling stuff. Yeah, I'm just curious what's going to go into short supply, and like hopefully on Microsoft's call they'll give us some color on this, but also tomorrow on Apple's call, I'm really interested to hear what Apple's going to say about the price of their products going forward, or if they're just going to save that horrible surprise for later this year, or if they're being granted an exemption from Glorious Leader, right? Because there's like all sorts of moving parts here, which is why I think a lot of companies are just not providing guidance. They're like, we don't know what to say. Yeah, I know that Apple's they're gonna say that they're moving to India, but you're not gonna be able to move your whole supply chain to India that quickly. And they've already been working on building phones in India because India has very specific rules for foreign manufacturers there. They want like stuff built in India if you're gonna sell it over there. So they've already been working on that. But the idea that they could snap their fingers and move all iPhone production to another country it's impossible. And they definitely can't move it here because even the stuff that they use to build iPhones is also built in China. Like, and the components of those machines, like the machine that builds the machine, is also made in China. So yeah, I don't know. I think they're at most at risk when it comes to this. Obviously, the video game companies are too. Xbox. Here's why I think Xbox might be fine, guys. They probably have plenty of Xboxes just in warehouses in America right now, right? Like, there's not like some shortage. You're not like running to Walmart and like, I can't get a Series X. Like, there's a Series X for anyone who wants one right now, right? So maybe they're not going to be affected as much. But I know that like Sony, they've already had to increase their prices overseas. It's just a matter of time till that happens here. Like, like the PS5 price, is that going to stay the same? It's their they have a press release and they have this like PDF, or sorry, they have a PowerPoint. Of course they have a PowerPoint. But yeah, let me get that for you. Press release. I believe it's called Earnings Call Slides. And there's this weird URL that Chrome generates whenever you open up any of these things. I'm just going to throw it in the news channel. Damn, we're going to have to pay attention to this Borderlands 4 thing. Someone else do it. Because I'm going to be streaming still. Line go up. That's a good question. What's the best line go up chart? Oh, what the hell? That's a bad tick. In after hours, Nintendo is down 17%. That does not look correct. Jeez. They just made my chart look ugly. I don't like that. Slide. Which slide? Slide 14 is the appendix. You should be looking at slide 13. It says gaming revenue grew 5%. Xbox content services grew 8%. Xbox hardware declined 6%. Were you looking at the hardware? Maybe it's the hardware number. Okay. I don't know if line went down because it happened on 46 shares. And there were 1.4 million shares traded today. That's what you call a bad tick. Because Nintendo doesn't even really trade in after hours because it's a pink sheet. Yeah, on E-Trade, the last trade shows up as 20.87, which is much better. I don't like line go down. Let's look at line go up instead. There you go. There's a nice line go up chart for you. That is a Rev Strat week in meta. Inside, went below that range, back inside of it, and then broke out above it. That is a Rev Strat. That's what a Rev Strat looks like right there, to the upside. On the week, so that means you have from today till the end of the week for that to play out. Problem with some of these monthly signals is that, like, the month's over. But yeah. The meta call will start here in about 6 minutes, so I'll probably go off of screen during that. You guys don't want to... Or I could do that influencer thing where I just point and don't say anything. Or nod my head. Let me know if you guys want me to be a mime during the Facebook call. God damn it. I shouldn't have done that. Why? Why do I do these things? I'm stuck in a box. Help me. Nah, yeah. Okay, we got the Qualcomm story. We got a couple of Microsoft stories left. The dividend one, or sorry, the buyback. Some companies we don't really report on had terrible quarters. This company, Supermicro, their stock was down 10% today. Teladoc acquired a mental health company. That's kind of cool. Like, on-demand therapists would be a... That seems like a good thing. Oh, about the patio? You know, Shacknews Intergalactic Headquarters R&D facility. We got plenty of sheds and shacks there at low prices that we probably can't ship to Canada without some huge amount of tariffs. But what about that blue chair? Who's gonna buy that blue chair? You don't know the blue chair? Have you not been watching the weather report? Blue chair is this year's poop tree, Bill. I trust me. I spent all off season really thinking about it. I'm like, what is my poop tree this year? I really think it's yeah. Oh, of course they're upsetting, and they were threatening the rest of my backyard. So yeah, this is an extra long episode of Game Trader Live today. We just went through the Facebook conference call. We were reporting news on Qualcomm and Microsoft earlier in the stream, but now this is going to be more like the traditional show. Sometimes the show is going to fall on a busy earnings week or day, and that was definitely the case this month. Hopefully in May it won't be the case. I always like to look forward to when my next episodes are. Friday, May 30th will be the next episode. And companies tend to not report earnings on Fridays, unless it's terrible news. And then also, we're going to be through earnings season by then. We're kind of in the heart of it right now, where Microsoft reported today, Facebook reported today, Google reported last week, Taiwan Semi reported last week. Both GM and Ford reported today. Ford didn't. Ford just issued a statement about tariffs, but GM reported. Looks like Nvidia is up in sympathy after hours with a lot of these other companies. Yeah. Basically, when Facebook's press release came out and it said they're increasing their spend on AI, Nvidia stock also started to jump. It's at the high of the after-hour session right now. It's funny, I was in Discord with our staff, and I was like, let's just remember this data point when we report on Nvidia later this quarter, because there are definitely signs of data center spend decreasing, but it doesn't seem like anything imminent. Looks like Microsoft is also at the high of its after-hour session right now. I don't know what was said in the last 5 minutes, but it caused the stock to go from 418 to 425 in a minute. So something must have been said on that call. Because the quarterly report was fine from Microsoft. I don't see anything. Anyway. Let's look at the broader market. Let's look at some signals. Let's see if we have any risk levels to pay attention to going forward. Well, that's an interesting looking chart on the S&P. The monthly chart. We're definitely closer to the highs. We're back inside of last month's range. So look for a breakout above last month's high of 567 and 42 cents. If you want, I guess that's a hammer to the upside. Yeah, you have the same thing going on here, where we had an outside corridor, which I did alert people to last month. We broke down below it, only to close back inside it. So you had a broadening formation, and now we're back inside of it. A brand new up and down trend. Whenever an outside bar happens, you have a brand new up and down trend that is created. So it broke down below that trend, but we are back above it now. So yeah, we're gonna pay attention. It's like I said, there's 4 outcomes. The stock could go, or this ETF could go above the high of the previous period. It could go below the low. It could stay inside of it, or it could take out both sides, like we saw the previous quarter. So yeah, we still have an outside quarter to pay attention to. That shows up differently on the monthly chart. Definitely looks like we attempted to bottom out here. The S&P hit an all-time high in February of 6. This is the SPY ETF. Hit an all-time high of 613.23, and by the middle of April, it was down at 481.80, kind of in a bear market. It happened really quickly, and in that same time period, we saw the volatility index spiked from. In the same time period, it was at 1474 in February. It hit a high of 60.13 about a week into the month of April. So we definitely saw some panic and fear appear in this market. But yeah, this is let's look at the monthly chart of the VIX. So you had a potential rev strat. It went inside month, RevStrat, but then it rejected that. So it broke out to the upside above 29.57, and it did it convincingly. You look back, and it went from 20 to 45 in a day. And then the next day it went all the way up to 60, week. The next week it went all the way up to 60. Basically what I'm getting at is the recent sell-off from the tariffs, it really was a 2-week thing. And then Trump has been walking back a lot of his rhetoric about it, and that's caused the volatility index to come back in. The other thing to pay attention to, I don't know if the 10-year treasury is really the best, but we can look at the ETF TLT. This represents the treasuries. I think it's, they call it the 20-year plus. This is the longer end of the yield curve. But you have an outside month in the treasuries, massive volatility. If we take out the low of 85, there will be more selling in the treasuries. If we take out the high of 94.09, there will be more buying. One thing I think is pretty interesting about treasuries here is when everyone was panicking earlier this year with the tariff, on Liberation Day and the 2 weeks after that, treasuries did not rally. And normally when people are selling stocks, they put their money in treasuries. But what we saw was, you can speculate as to who was selling it, but one thing we know is somebody was selling treasuries aggressively at the same time that the stock market was crashing. And the dollar was losing value. So it's like, I think the effect, and this is just my opinion, but I think there's other people out there who share this opinion. The effect of the tariff implementation, the ham-fisted tariff implementation by the Trump administration that began on April 2nd with Liberation Day, has led to a overall devaluing of the American brand. And that's showing up in dollars, that's showing up in treasury bonds, that's showing up in U.S. securities. So that's going to affect every asset here in America. And if let's just say the entities that own the treasuries could cause a financial crisis in the United States if they were to collaborate in dumping treasuries. So that's a danger here. But you have an S&P that is like barely green on the month. So you have a big ass range to pay attention to. But you do have an uptrend that was broken and is now a little bit lower. But still an uptrend in place in the S&P for now. But obviously short-term pain. So that's just the S&P. Let's take a look at the Dow Jones. Similar looking chart on the month. You see that volatile breakdown. This was not as clean of a break. It wasn't an outside quarter. But you're developing a quarterly hammer. Not a whole lot to say about the Dow. It's going to look... These three charts I'm looking at are going to look similar, but they have different components. We're looking at the weekly chart. Here's the monthly chart of the NASDAQ. That did have an outside month and down, and then even broke down further below that. So the NASDAQ was weaker than the S&P because I think the tech companies have an outsized exposure to the tariff issues, specifically the Chinese tariff issues. But it's not just them. I mean, like, you can go look at GM, since the tariff has been out, is down about 5-10%. Actually cooking up a RevStrat quarter in GM. I would not buy GM with anyone's money. I hate that company. They did terrible things to people, bondholders, employees, all that stuff. Anyway, Ford also kind of in the crosshairs of these automobile tariffs, because they don't really make many cars here in America. They may assemble some, but they are getting hit by this Canada and Mexico tariff pretty hard. or they're going to be. Tesla had an inside quarter. It's now trying to rev strat back up. Financially, their results, their quarter was the worst quarter I've seen from the company ever. So it is surprising that the stock was up 9% in the month of April. Elon Musk did attend a cabinet meeting today where he said that he's going to be spending more time at his companies. I don't know if that's a good or a bad thing at this point. I'm jumping around a little. Let's see. We got Apple tomorrow. Might as well look at them. Apple down on the month still. Green on the week. It's kind of had a nice bounce back here. Outside day. So you're going to look for a break down below 206.67 would be a sell signal on the week. And a break out above 213.58 would be a buy signal. I don't know how Apple is going to have anything good to say, considering how... Sorry, that's the daily chart. So you'd have an outside day ahead of earnings. So you have a defined risk range. If it breaks down below 206.67, I think there could be some considerable downside to the stock. It traded as low as 170 the week after Liberation Day, so we'll see. I know people are saying that they're going to move manufacturing of iPhones to India. I don't know how rapidly they can do that. Hopefully we get some color on that on their conference call tomorrow, which you can listen to here on Twitch tomorrow. So hit the follow and the notification bell. Maybe throw us some bits. But yeah, Apple, not looking great. But, better than it was a month ago or 3 weeks ago. Still down materially from its all-time high. And it's red on the year. It's trading inside year right now. I wouldn't be a hero in this stock. It's entirely possible that it just turns around inside of last year's range all year round. Speaking of churning around, GameStop. I just want to get to this quicker because people want to know what I think of this. Yeah, an inside month. Basically, the last 2 months, the stock has done nothing. So now you have to watch, the low, $20.78 would beget more selling. A breakout above $28.25, it would get you going again to the upside. You got $29.80 to pay attention to as well. But this is an outside month. This was an outside month in March, followed by an inside month in April. If things get going, the stock could maybe try to run into the low 30s, probably around 31 in the next month. So that's, a little more than a 10% gain. That's not terrible. But yeah, just wanted to call attention for those GameStop people out there. You have an inside month, which gives you a defined risk range to pay attention to. And you have that broadening formation from the outside month the previous month. I want to say it's trading inside quarter as well. Yeah. So it could just sit here and continue to do nothing for 2 more months. Stay tuned. But you do have that monthly... You have a monthly potential for a signal. And that would be valid for the entire month of May. Let's go back to the alphabet. AMD is one of those semiconductor stocks that's really gotten hit. This was a stock that was trading for $227 a year ago in March. It is currently trading for $99. It got as low... It went below $80. It was $76.48. I still think it could probably go lower, considering the uncertainty around these tariffs and the effect that's going to have on demand of their products. I don't know if we're really seeing, I don't think we're seeing companies be fully transparent about what's happening as a result of these Trump tariffs yet. But once the numbers start coming in for Q2, I think it'll start to paint a picture that may not be the best for a semiconductor company. Amazon also going to get hit by tariffs pretty hard here. Most of the products they sell on their website are made in China or drop shipped from China. You do have an outside week that it's trying to stay above. So above 1 189 and 94 cents would be a buy. It's currently right above that, so you do have a weekly buy signal ahead of earnings tomorrow. And it did try to find a bottom here around 160 earlier this month, so we can keep an eye on that. It is no quarterly signal, and it is red on the year. So there's Amazon. Figured I'd do the Magnificent Seven, right? People love those. Google, still down on the year. Green quarter. It had an outside quarter, and it came back inside of it. So, I mean, if it really gets going, it could get above 207. You'd have quite the buy signal, quite a wave of momentum. I'm not holding my breath there. They got a lot of antitrust lawsuits and stuff overhanging them, and also just their website kind of sucks now. But yeah, they had solid earnings results. It's trading inside week after an outside week. So a breakout above 166 and 10 cents would be a buy signal. Below 146 and 10 cents would be a sell signal. We are trading right in the center of that range right now. So who knows where it will go from here. Let's Google. GoPro's still trading. I just want to point it out. It's not dead yet. It's pretty close to dead. I mean, that's... Wait, that's just 14 a share. My God. Hold on a second. That's the worst. This is a really bad chart, you guys. Just throw it out there. Axeman says he got a wind-up alarm clock. What year is it that you're getting a wind-up alarm clock from Amazon? I get the one that's like, mang, 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 mang. That's how I wake up. But yeah, PHLB, it unwound. It won't even lock the ratchet anymore. Yeah. Anyway, I'm sure it has a similar build quality as most of these GoPros that are sitting on store shelves still. GoPro, 57 cents, was once a $90 stock. Not sure if they're going to make it. Anyway, we're going to move on from that. Plastic gearing. Intel's not dead yet. Trading inside week after an outside week. Their earnings weren't terrible. But they're in the midst of a restructuring. They had to, their foundry business is not doing well. They're going to sell it off or spin it off. You do have a potential buy signal in Intel. Look, I'm never going to tell anyone to buy this, but there is a technical reason on the chart. If it gets above 2390, you would have a RevStrat monthly buy signal for the month of May. It traded inside. Basically, it traded inside of February's range in March. We broke down below that in April and then came back inside of it. So you have a potential RevStrat buy signal to the upside on the monthly chart of Intel. iRobot's still not bankrupt for now, although they did issue a warning saying that it could happen. I dumped my shares as a result, so I took about a 60% loss on that. But yeah, sometimes you just have to cut your losses. I wish I did it earlier. This is insane to me, though, that this company might go bankrupt after it almost got acquired by Amazon. So the deal got blocked by the European Union, and now iRobot may go bankrupt. So I don't know how you can argue that that was actually an anti-competitive acquisition if the lack of the acquisition is going to kill the company. I don't really get on my bully pulpit about regulation ever, but in this case, I think some of the antitrust regulators don't know what they're talking about. And yeah, iRobot shareholders really got screwed over there. We were just talking about them, but Meta reported today. Yeah, you got that potential hammer, Doji, to the upside. on the monthly and the quarterly chart, kind of did nothing. If you like, it was much ado about nothing. Like if you were in a coma for all of April and you're a Facebook shareholder, it opened the month at 570.66 and it's going to close the month around 571.50. It hit a low of 479 during the month and a high of 592 during the month, but really it didn't do a whole lot. So yeah, it's been a round trip on the Meta train. Microsoft with the outside month to the upside, so that you have instant broadening formation here, and it's moving in after hours still. So if you take out the high of April, which is very close to doing, obviously, because it's like basically trading right there right now. Currently, it's 431.04. We'll see where things play out on that front, but yeah. So if you take out April's high in May, you'll have a buy signal on an outside bar to the upside, and that's a huge move for Microsoft. This weekly chart looks good. The daily chart outside to the upside. So even just tomorrow, you're gonna have a buy signal if it gets above today's high. But yeah, we focused on Microsoft and on Meta during today's stream, so I'm not going to dwell too long on them. Man, look at Netflix just eating everyone's lunch. It's getting kind of crazy. Outside month to the upside, so yeah, it's a buy signal above the all-time high of 1133.50. They're really crushing it. This Nintendo chart's broken. You broke the chart. This is not the proper chart. This is a bad tick on the Nintendo chart. How do I... Yeah. Anyway, we'll get to Nintendo here in a second. Nvidia. See what the monthly chart looks like. Another one of those hammers to the upside. So, you know, they report earnings next month. We'll have to keep an eye on that. But yeah, you had an outside quarter. It broke down below that only to come back inside of it. Maybe we're going to make a run to the other side now, which would be the all-time high of 153 and 13 cents. So we'll see what happens there. You could maybe take a flyer on it if it gets above April's high in May. But based on the results we've heard today, with obviously some mixed results with respects to demand for data centers, the capital expenditures for data centers, and how that's going to affect demand for NVIDIA's very, very expensive chips. Also, they took a $5.5 billion hit because they sold some AI chips to China during the quarter. So they pre-announced that hit already, and the stock's back above where it was trading when they announced that. So yeah, that's Nvidia. Tesla's inside quarter. Yeah, I don't know. I don't know why the stock went up. I think it went up 18% last week because Elon said he was going to be less involved in the government. But him being involved at all, I think, is a problem. And the things that he's already done have done irreparable damage to the Tesla brand. This is still the stock. I would stay the hell away from this stock, both on the long and the short side. Just kind of gonna let it figure itself out. The forehead slap, why don't I just buy the stock and forget about it? Trade of the month. Take-Two Interactive, outside month to the upside. So you're going to want to buy it above this month's high, which sounds crazy, but this is what momentum looks like. You got a defined uptrend a little bit lower than here, obviously, at around 154. But yeah, it's definitely extended quite a bit to the upside. I think people are expecting some GTA 6 news, either another trailer or maybe the release date announcement is imminent. They have earnings coming up as well. But the story here is we're all waiting for GTA. You can say shit like BYD has removed Tesla as a factor, but in the environment that we're in right now, where you can't buy a BYD car in America, that's a pretty big market not to be in. I wouldn't say that Tesla's not a factor as a result of BYD in America, but when it comes to China, that's for sure. When it comes to Europe, that's for sure. When it comes to Australia, that's for sure. But in America, in this environment, with all these tariffs and all these rules about building things in America, I think Tesla's actually well positioned. Not from a brand perspective, from a building cars in America perspective. If you listen to that conference call that we covered last week, they talked about how about 85% of their supply chain in America is regionalized. That's better than any other car manufacturer in America. That has nothing to do with their car, the quality of their car, what you think of the brand, what you think of Elon Musk. Just simply from a capacity standpoint, Tesla is better positioned than almost any other automobile manufacturer in America. Not anywhere else, in America. But yeah, and that's not to talk about the demand for their vehicles, because I think they have a huge demand problem. But yeah, like, Tesla is better positioned than most other automobile companies to deal with whatever we have ahead of us. Taiwan Semi reported last week. He had outside day to the upside today. But yeah, they had solid earnings. They kept their guidance intact. They're another one of those stocks that got hammered during the tariff fears, and it closed the month on its highs. So you're going to want to watch for a breakout above the high of 170, 175. It's always funny to me how people are like falling over themselves to buy this stock in January at 200 something. But then when it was down there at 134, no one wanted it. No one wanted it down there. There's a lot of risk involved in owning a Taiwan chip fab that, between the national risk they have of being, a region that, China wants to, the one China thing, but also tariff risks. Texas Instruments, wow, had a red month, but definitely clawed back a little bit. They had a solid earnings report. Last week they had a breakout, inside week and up buy signal. It's just kind of consolidating last week's gains, but the numbers out of Texas Instruments were actually pretty good last week when they reported. We'll keep an eye on Unity, just in general. Oh yeah, I got an update. I bought 2 stocks during the shit show. I've been talking about buying them. One of which I think I've talked about this stock almost every episode of Game Trader Live, and I just haven't bought it. But I did it. I'm a Ubisoft shareholder now. When it was trading at around $2 a share, I scooped up shares in multiple accounts. It's not a large position yet. I'd say it probably about like 5 to 10% of the size that I ultimately want to own in the stock, potentially. But it got to the point where I was like, I have to put something in here. It's just, look, if you back out all their debt, they're valuing the company at less than the deal that they just made with Tencent. So it's like you're buying a 3 billion euro company for like 1.6 billion euros. It's a sum of the parts thing. So I waited a long time. Like here's the long-term chart of Ubisoft. It peaked at 24.55 in July of 2018. I'm buying it around $2 here in 2025. So it was definitely a speculative play. I'm not putting a lot of my assets toward it, but I did deploy some cash during this recent sell-off. And of course, it's going to be these turds on the floor kind of stocks. It's not going to be... I did buy a somewhat high flyer also. So yeah, let me talk about the other stock I bought. In full disclosure, I'm just disclosing these to you. I did not... It was not an impulse buy, man. It was not. I spent months talking about buying it because it's been trading between $2 and $3 for like half a year. So if it was an impulse buy, I probably would have bought it by now, man. Like it took me 7 months to want to do it. And it just was, I think at $2, it's a nice lottery ticket kind of price. A very long impulse. Yeah. Hey, Lucci. A long impulse. Yeah, I guess you could say that. No, it was a calculated purchase. And so is this other one I acquired shares in TKO. This was just a gut feeling when things were going poorly at around 143 a share. When the panic around the tariffs was really reaching a fever pitch. When the VIX was around 60, I bought TKO shares. I think that they're just well positioned right now with the UFC, with WWE, with professional bull riding, the Slap League, but also like everything they're doing on the content side, where they have a WWE deal with Netflix that's doing very well. They have their Peacock deal. They have Sunday Night Main Event. They have, this is just wrestling I'm talking about. They have Monday Night Raw on Netflix. They have NXT on Tuesday or on Wednesdays. Or is it Tuesday? Wednesday. They have this new Netflix documentary thing that they're doing. They're doing very well. WrestleMania was a huge success financially. I wouldn't say it was artistically a good WrestleMania at all, but they made a ton of money. They set records for the gate. They set records for attendance. They set records for viewing. All that's good. Also, TKO, to me, it's like the idiocracy stock. Like, if you think that we're in an idiocracy, which I do, we have an idiot as president, yeah, you can own, I think you can own TKO here. They're less impacted by stuff like tariffs, too. So which is why I found it interesting. So I did swap out of a stock. I exited my TDOC position at about a 70% loss. And I said, I don't think I'm ever going to make my money back in TDOC stock coming back. So I swapped that money out and I bought TKO and a little Ubisoft with it. I only bought TKO in one account. I'm still watching it. Like, it's not necessarily super cheap on a backwards looking basis, but I think that they have a huge opportunity to grow. And yeah, the former CEO of WWE is now in charge of the Department of Education and called AIA1 the other week. But yeah, TKO, full disclosure, I own it. You had an outside month to the upside. So above 164, I think the stock can keep going. But yeah, it's a pretty young company. And it's kind of growing into its multiple sort of thing. But I think that the UFC has a pretty good future. WWE has a good future. And just the content in general. I think content is going to be... it's going to hold up better in this economy than like your retailers and stuff. Manufacturers. So yeah. Buy some energy drink stocks. Brondo. I do own Coca-Cola. That's the first stock I ever bought, Lucci. So yeah, those are just some of the things I wanted to bring attention to. I think I already looked at we looked at the broader market, but let's look at the semiconductor ETF again. Similar to those other semiconductor charts, hammer to the upside. So you want to watch a break above 216.61 to get a continuation of this recovery. I did point this out. I just want to pat myself on the back here. I pointed out the outside quarter last month on the last month's episode, and I said watch for a break below 204.51. Guess what happened? It broke below 204.51. It went all the way down to 170. If you were brave enough to short the SMH on that, you could have made $30 in like a few weeks. Like, this happened. Yeah, it was like 2 weeks. You could have made it over like around 15% on the short side. So it's not all long here. The strategy I use, called the Strat, created by Rob Smith, it works on the long and the short side. You had a sell signal, it when it bottomed out, you could have covered if you're a master of timing trades. But yeah, there was a short trade to be had on the SMH. And this is the semiconductor ETF. So this is like Intel, Nvidia, Qualcomm. Like if you don't want to buy individual semiconductor stocks, you want to buy the sector, this is it. This is your ETF for that. But I think it was leading the market lower because people in the semi industry and analysts in the semi industry have been talking about tariffs for like 4 months now, whereas like, or probably 8 months, whereas like a lot of the retail investors, it's only been a topic of discussion this month, right? So I think we're seeing a big shift in how people are viewing stocks, and these semiconductors, I think, are like, and it's a broad thing to say because there's chips for cars, there's chips for computers, there's chips for Nintendo Switch 2, there's these giant GPUs for data centers now. But in general, I think the semiconductor demand is it's more important when assessing the health of the global economy than any other commodity now. And I know it's still high tech, but I still consider like chips to be a commodity in today's world. So watching supply and demand of this, watching the tariff dynamic in this sector is going to be very important going forward. Obviously, one of the largest companies on earth is Nvidia. Apple makes their own chips. They don't make their own chips. They design their own chips. But then they have Samsung or whoever else make them, Taiwan Semi. But yeah, we want to pay close attention to this specifically because I think it will affect the price of almost every consumer electronic device this year. But yeah, that's about it from the sector standpoint. I don't want to go too crazy. And yeah, I've been streaming for 2.5 hours already. Yeah, Scanner, you missed me mime reacting to the Facebook call. I hope you guys liked my non-verbal reactions to the Facebook earnings call. I don't want to do that again. That was weird. But, yeah. Okay, the Nintendo chart is busted. This is not the correct chart. So I'm not going to... You know what? I'm going to just... Maybe I should just put up footage of Kirby saving the world instead while I talk about Nintendo. YouTube. Shacknews World of Light. There we go. Got some B-roll. There we go. That's better. So yeah, let's talk about Nintendo stock. It hit an all-time high today of... Sorry, let me just get the actual number. $20.88. It is up over 40% on the year. The pre-order demand has been through the roof for the Nintendo Switch 2. Most retail websites were busted last week when the pre-orders went live in America. But it seems like demand everywhere is good. They had 2.2 million people register their interest for a Nintendo Switch 2 pre-order in Japan. For a frame of reference, the Switch 1 at launch sold 330,000 units in Japan. So we're talking about like 7 times the demand from the first Switch to the second Switch in Japan. That's wild. And we don't know what the demand is globally. We do know that they've sold out everywhere. Retailers are planning on selling some Switches physically, like in their stores on launch day. So if you didn't get a pre-order, you could go to like a Costco or maybe a GameStop or a Walmart or a Best Buy or a Target. I wouldn't go to Target, but you know, wherever sells gaming to maybe get that. Look at Kirby here. Just look at him for a second. Saved the world. But yeah, so I guess the question I am getting asked a lot And like you may wonder like why the hell should you care what I think? Right? Why should you care what I think about Nintendo stock? Well, I own Nintendo at $3.89 in my retirement account, and it's currently at $20. That's probably one reason. I've been researching this company intensely for probably the last 20 years of my professional career. Basically, ever since I got into investing, I was looking for deals, and I started buying Nintendo stock, like ahead of the launch of the Wii U and the 3DS. And then I held it throughout the entirety of that time period. My thesis was that the IP was being undervalued, and I was right. So now here we are, years later, and the stock is finally breaking out. So what next is the question, right? I think that's what people want to know. Like, what should you do next with Nintendo stock? Or should you buy it, right? Like, should you buy Nintendo stock? If I didn't own it, would I buy it today? The answer is yes. But I'm going to say something to kind of couch my statement, kind of put a qualifier on this statement. The global economy is in a terrible place right now. Like, Nintendo's timing is god awful. The Nintendo Direct occurred the morning before Trump announced the tariffs. Like, so they were shooting from the hip when they decided to price it at $450. And if the tariffs in Vietnam stayed at 54% and were not brought back down to 10%, the Switch 2 would have definitely seen a price increase in America. It didn't because Glorious Leader put a pause on it for 90 days or whatever. The problem here is it was just a pause, right? So like it's a possibility, it's a risk, it's a legitimate risk that Trump rolls back his rollback of the tariffs and increases them again. So if he increases the tariffs to 54% in Vietnam, all bets are off on how far Nintendo stock will fall because they are in the center of this. They make Switch 2 in China and in Vietnam, and they're diverting their China allocation to Europe and to Japan, maybe Australia a little bit, like 4 people in Australia who will get their Switch 2s. But they are trying to ramp up production in 2 geographies simultaneously. One in Japan, one to facilitate the demand in Japan and Europe, and the other to facilitate the demand here in America. It's like they want to get as many Switches as they can produced and shipped to America while the tariffs are at 10%, right? And they know that demand is there. So my answer is this. Should you buy Nintendo stock? Maybe not. Here. Maybe not. Like it's run a ton. It's up a lot on the year. And it is a company that is going to be affected if the trade war escalates. I want to make that risk abundantly clear to people. If you think this is a trade, it's not a trade. So you want to take advantage of those pessimistic times, right? When you have the panic of the past month, there was honestly a good opportunity to buy Nintendo stock at around $16, $17 just like 2 weeks ago. And now it's above 20. It's almost near $21 a share. So my answer is twofold. It really depends on your time horizon and also your risk tolerance. I think in the long run, and that means 5 to 10 years from now, hopefully long after Donald Trump is gone, hopefully, that the stock is going to head towards $40 a share. When they fully realize the cinematic universe that they have, when they fully realize their merch, their trading cards, their the amusement parks, right? Like all of these efforts that they've put in place. Maybe they finally make a mobile game that actually does well, or a mobile app that does well. But at the very least, like, we know we're getting a Mario movie next year. We know we're getting a Zelda movie in 2027. Those are two catalysts there. We know that there's more games coming, right? But the question is, and I think this was my fear going into this generation. I've kind of come to grips with it. This is not a Wii U, right? It's going to outsell the Wii U's first year in the first day. So it's not a Wii U. I think what they've done with the continuity of your purchases on the eShop from Switch to Switch 2, what they're doing with Game Share is good. The upgrading of games is good. Obviously, some people are mad that you have to pay a little bit more for better frame rates. I'm okay with that. I think if you already own Tears of the Kingdom, the $10 is not going to kill you. So I think that a lot of what they're doing, just from a continuity standpoint, this is the first time that they're doing that. So I think there will be a one-time benefit of that. Kind of like last generation, where Nintendo had that one-time benefit of combining their handheld devs with their console devs, right? So instead of having a Mario 3D Land and a Mario 3D World in simultaneous development for 3DS and for Wii U, they just had Mario Odyssey. And we saw how much of a banger that was. And then we got Bowser's Fury down the road. So it's like, that was a one-time generational benefit. And you're not gonna get that again this generation. So I think what they're getting this time is the continuity of the Nintendo account. And there's like 200 some million Nintendo accounts out there, and there was 150 million people who bought a Switch. So I think creating continuity for your user base in like an iTunes-like way, it creates that halo for Nintendo products. So I guess what I'm saying is, this might not be the Switch when it comes to how successful it is. That's entirely possible. Because the uniqueness of the Nintendo Switch, it's not there anymore. Like, there are other handheld gaming devices in that form factor. So I think it's going to be more like 3DS. Where, like, DS was wildly successful. Still their number one selling device at Nintendo in the history of the company. 3DS came along, it sold half as many, but 75 million units of the 3DS is nothing to scoff at, and the software did well on the platform as well. So it's like, I foresee something similar happening here, where Switch 2 costs more than the Switch 1, so that's going to shrink demand a little bit. The games cost more than Switch 1, that's going to affect demand more. So it's like, but the average selling price of the Switch 2 is higher, and they're coming off of a very low bar. Like, people need to remember that last year was year 8, basically, of Nintendo Switch. And they didn't sell many. They didn't hit their internal targets or any of that. So they have a very, very low bar to clear. Like, their year-over-year comps are very favorable. So if the world doesn't end in the next year, it stands to reason that Nintendo's going to have internally a tailwind. Externally, the world is a headwind. The world economy is a headwind to Nintendo. So I guess my answer is this. If you can stomach short-term volatility, like if you can handle the ups and downs of this market, if you made it through the last month of this market and you didn't sell, you shouldn't sell. If you can hold on to the stock for 10 years, and you should take advantage of the dips, these panic dips, take advantage of them to add to your position. So my answer is no. You shouldn't be selling it here, if you're okay with the risks I laid out. But there are legitimate risks that you need to factor in here that are not controllable by Nintendo. It's not unlike when the Fukushima disaster happened ahead of the launch of the 3DS, right? And I know I'm comparing Donald Trump to a nuclear disaster, but the shoe fits. So yeah, I guess that's my answer, is that it depends on your risk tolerance. It depends how long you're willing to... Risk tolerance and time horizon will affect if you should buy or sell Nintendo here. So... for the most part, I'm going to hold on to it. I have it in every account that I manage, and each account that I have has different amounts of cash on hand. So the largest account that I manage has like around 15 to 20% of the portfolio is sitting in cash right now. And this brings me to another issue that I have right now. I mentioned it earlier in the show when I was looking at the Treasury chart. The effect of this trade war is that people are not going to respect American assets anymore. They don't trust the American government, and they're not going to respect some of these asset prices. So the value of the dollar, if the dollar is no longer the reserve currency of the world, it's going to go down in value. So normally in a recession, the dollar is a safe haven. I don't know if that's going to be true this time. And normally in a recession, U.S. treasuries are a safe haven. But if not England, but like let's say if Japan, China, Korea, Russia, if they all start, or Saudi Arabia, if they all start dumping their treasuries in unison, there's nothing that, it's going to get very ugly very quickly. And that's what happened. Like, a lot of people want to know, like, well, why did Trump walk back some of his tariff talk? Because the treasury market was collapsing. That's what happened. We don't know who was selling, but we know the selling was there. And we know it could easily return. And it's what's really scary. And this is very U.S. centric. The United States economy is in such a bad place because the Federal Reserve was tightening monetary policy before all this happened. Because they were trying to get inflation under control. And now Trump's throwing gasoline on the inflation fire. And it's a self-inflicted recession. In an inflationary environment, the Federal Reserve is not going to be able to cut rates because inflation is going to get out of control if they do. So they're not going to be accommodative. Yeah. So I think it's there's like it's funny, like Nintendo might be a safe haven asset, I guess is what I'm getting at. That's the conclusion I've reached for now, is that I think Nintendo's management is more sober than the president of the United States. I would rather trust the full faith and credit of Nintendo than the full faith and credit of the United States government right now. So as someone who does have cash on hand in some of my accounts, other accounts I don't. I'm like fully invested because I don't trust the dollar and I don't trust the treasury. And when you don't trust those two things, that's really scary. Like, what that means for the future is kind of terrifying. And like, the thing that I'm trying to come to grips with is if the U.S. economy is going to suffer, and it's about, I think U.S. and EU are like 80% of revenue for Nintendo. If demand is not there for this thing, or if, it dries up by the end of the year, it could provide huge problems for Nintendo. Because $450 is not cheap. It's not like insanely expensive when you look at gaming devices these days. But like, it's a one-time purchase that people may not be able to afford this year. So I'd say like the biggest risk to Nintendo is the U.S. economy and how the U.S. tariff policy will affect Nintendo's supply chain specifically. But in the meantime, I think it's been a boon for them over in Japan, because like it's this patriotic duty now to support Nintendo, this great Japanese company. We support you. We're gonna buy this thing. It almost like thumbing their nose at America, because the SKU in Japan is cheaper. So Japanese citizens are getting the Switch 2 for materially less than it costs to buy it here, or anywhere else on Earth. So I think there's an element of that going on too. But forget the economics of the thing. I tried out Switch 2 since the last episode of Game Trader. I actually, 2 days after the last Game Trader, I went to New York City and I got my hands on the device. It's awesome. It's flat out awesome. It's 4K 60 FPS Nintendo games. That's awesome. Like, it's, oh, did you not play Tears of the Kingdom last generation? Well, guess what? It's 4K 60 now. You have no excuse. So yeah, I think it's an exciting time for people who like Nintendo games, because we're getting Mario Kart. The menus were very similar, Scanner. Like the OS is very similar. They actually did a Switch update last night that added game share and the virtual game card to the UI at the bottom. So we got a pretty good idea of what it's going to look like. But the home screen looks identical, man. They didn't add folders. It wasn't, the menus did not seem very different. Yeah, no, I know. I think the guide traffic that you're going to be able to find with Switch 2 is like how to lend someone a virtual game card, how to do game sharing. It's cool to see game share come back, because that's like a DS era feature where like one person can have the game, but if you're all around each other, you can do this like local ad hoc network. I think that stuff's really cool. Yeah. But I also got to play, I played Mario Kart World, I played Donkey Kong Bonanza, and yeah, I'm excited by both of those games. Obviously, the price of World has shocked people, but if you buy the bundle, it's kind of not that big of a deal. You're paying $50 for an $80 game. Like, the Switch Kart bundle, that needs to be forever. That can't be a limited time thing. Like, that's the no-brainer purchase of this era. I did buy the camera. I got a couple of Pro controllers coming too. I'm very excited for Mario Kart World, but I'm also really excited for Donkey Kong Bonanza. I think that game it just looks fun as hell and unique. And I love that Donkey Kong is getting some love, because it's always Mario, 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 and now we're getting Donkey Kong. Also, like, destructible environments, that's just my vibe. I am ordering my dinner before my place closes. This is a long episode. 3-hour stream here. God damn. I'm gonna have to ask for a raise. I'm gonna get 100% raise. 0 to 0. But anyway, yeah, Mario Kart World, Donkey Kong Bonanza, Cyberpunk 2077 actually runs. I saw the CD Projekt Red put up, I think they were talking to sorry, was it Eurogamer? I think it was Eurogamer. That they said, yeah, the best way to play Cyberpunk in handheld is the Switch 2. They're not pleased with how Cyberpunk runs on the Steam Deck. So that's interesting, because I don't necessarily think the Steam Deck is weaker than the Switch 2. Look, Lucci, I'm going to give people credit for whatever story, they wrote. I don't want to steal people's content. But, yeah, like, that I think is interesting to hear. Third parties, like the games that I played, I tried out Street Fighter 6 on a Switch 2. It ran great. Hades 2 was running on a Switch 2. It ran well. I did get to play Metroid Prime 4. We're not talking about this as much lately, but the mouse gameplay on the Switch 2, I think is going to be, like, actually good. And I will say this, there was a leak of a menu screen scanner where it showed that you could use a keyboard with the Switch 2. So if the Switch 2 allows for keyboard and mouse gameplay, that might be really cool for first-person shooters, like, on the couch. Or, like, on a... what I mean? I think that's an interesting tidbit that we saw that came out recently, that keyboard and mouse gameplay may be a thing. It also might just be good for accessibility in general on the Nintendo Switch 2. But excited to try out more mouse gameplay. I did do, like, it was, like, left hand, I was just using, like, a regular analog and the trigger. But then on the right hand, I was using the mouse style in Metroid Prime 4. And I was playing at 1080p, 120 frames per second. And I looked up at the person at my demo, and I was like, can we get an F-Zero like this? Not with the mouse, but, like, 120 FPS F-Zero? Like, injected into my eyeballs? That would be great. So, yeah, the hardware itself I thought was impressive. And the concern I have, and this is something Miyamoto kind of laid out, is that it's going to take longer to make games. And I don't doubt that at all. I think it's going to be a bit of a challenge for them, because this is the first time they're making 4K games. And I know they're not necessarily making 4K assets for this. It's likely a lot of DLSS stuff going on. but their implementation of DLSS is pretty awesome. If they're using an 8 nanometer processor and are able to generate these kinds of results, that's that Nintendo magic that they do with their art, right? I ordered it like everyone else, Lucci. I don't know if I'm going to have a review unit of this thing. I can tell you right now, I don't. I have not signed any embargo. I can tell you that I don't have a review unit for Switch 2 as of April 30th. I would love to review the thing, but I don't think they need reviews. The thing's out. The thing is sold out everywhere. So I kind of treated that preview event like it was the review. So I did the best I could to provide as much content as possible. We got a lot of gameplay up, just over the shoulder stuff. And then, obviously my hands-on previews for several games as well as the system itself. But, yeah, I do intend to review it. There's no special Asif way of getting the Switch 2, man. I just brute forced the Walmart website and the Best Buy website. So I was able to secure 2 Switch 2s. The orders have not been canceled yet, so we'll see what happens on that front. But pretty exciting. It's just exciting, man, when there's a new system. So there's going to definitely be hype around the launch. And that might give people an opportunity to take some gains. I'm going to... Yeah, I definitely... Yeah. Lucy, Nintendo doesn't care how much money I've made off of their stock. I can tell you that right now. It didn't get me an interview with Doug Bowser. I'll tell you that much. But yeah, it probably should. You can find this really horribly lit video. I was actually sitting in this very place in the fall of 2016. I think I was facing that way. But I shot a very poorly lit video where I explained my long thesis for Nintendo ahead of the Switch 2 launch. Ahead of the Switch 1 launch. And yeah, basically everything I said that would happen has happened. And if you listen to me, you made a tremendous amount of money, at least percent-wise. And yeah, now it's... I guess my point is, I'll put it kind of simply. I think that the stock has upside of $40 per share, but that could take 5 to 10 years. And in the near term, I think it has downside to like 15, or if things get really ugly, maybe even 10. At that point, I would probably buy shares. Like, that would be an opportunity to buy. But my point is, there's a lot of hype in this stock right now. And it might be a buy the rumor, sell the news event, or it could just be a liquidity event in general, because once the public starts to hear about the Switch 2 being out, all the jaboofers run into the stock at the wrong time, and they're buying it up into the mid-20s or something. I guess my point is, if I think it's going to 40, the risk-reward is way more compelling when it's 15 than when it's 25. You know what I'm saying? Like, if it's at 25 and I think there's downside, like worst case downside is 10, that's $15 of downside and $15 of upside. Whereas when you're buying it at 15, that's $25 of upside, $5 of downside. That's how I view risk reward in any investment I make. I'm like, what is the potential downside? What is the potential upside? Is it worth it? And how long is that going to take? And I just think at this point, I'm actually surprised that the stock is where it is. Because, like, things are not going well in the economy broadly. And it's like, it might be a very unique case where, like, Nintendo trades on its own merits. And sometimes that's to its detriment. I think in this time, it's like the cycle is here. But at the same time, they showed us in the last generation that maybe Nintendo is not a product cycle company anymore. Maybe they're going to become a recurring revenue story. And when that happened at Apple, we saw Apple go from a 10 PE ratio to a 35 PE ratio. If that happens here at Nintendo, I might be wrong about my $40 target. It might go higher. But that's going to take time. It took Apple like 5 years for the services revenue to become the story there. In the case of Nintendo, it's the mobile IP income. It's the merch. It's the amusement parks. It's the movies, right? So it's like, when do those things become bigger than the games, or at least sit side by side with the games? Because right now, hardware and software are still their number one, that's where they make their money. So it's a longer term story. If you have the patience, I think Nintendo is still a good investment. If you're worried and you're up late at night because of tariff fears, maybe you should lighten up. Maybe you should lighten up on your holdings. That would be my advice. So I feel bad that I don't have a definitive answer, but I think it's a nuanced answer that takes into account everything going on. Any questions before I go? This has been 3 hours. Got some clips. Let's see. No questions this week. Just glad I already own property. Yeah. And just kind of from a broader standpoint, I do want to mention just like we are seeing evidence of the effects of the tariffs. And this is like a little off the beaten path from what I normally would talk about on this show. Oh, wow. We have breaking news here. I don't know if anyone on staff is watching right now. But we got breaking news out of Apple and Epic Games. Court finds Apple executive lied under oath in the Epic Games trial. Vice President of Finance outright lied to the court. Neither Apple nor its counsel corrected now the obvious lies. Interesting. Greg, I don't think you're going to write this story, but whoever can, I'm going to drop it into our news channel. But yeah, we just got breaking news out of Apple. Here you go, live on the show right here. In stark contrast to Apple's initial in-court testimony, contemporaneous documents reveal that Apple knew exactly what it was doing, and at every turn chose the most anti-competitive option. To hide the truth, Vice President of Finance Alex Roman outright lied under oath. She accused Apple of withholding documentation, including a meeting with Tim Cook about how they would comply with the 2021 order. Wow. There was a 2023 meeting that Tim Cook held about defying the court order. Yeah, this is bad. I would, yeah, that's bad. Throw it out there. That's not good. But yeah, that isn't even the bad news I wanted to talk about before I go. Yeah, this idiot blaming Biden for the second quarter GDP is absolutely insane. But that's what we're getting here. God, there was a story from Ford. Sorry, I'm trying to find that. They've had so much news today. It got put. Yeah, here we go. Yeah, Ford CEO says Trump's tariff reprieve is helpful, but more changes are needed. They haven't reported yet, but yeah, there is a Trump auto tariffs. He eased some auto tariffs, but yeah, GM mentioned it on their call. Stellantis mentioned it on their call. Volkswagen announced their guidance was affected by the tariffs. So yeah, things are gonna be bad in the automobile industry, guys. But yeah, I got some breaking Apple news here right at the end of the show about that. Sorry, I'm gonna just Google something real quick. I'm trying to find the. Yeah, so GM, they beat Q1 numbers, but they pulled their guidance because they just like we don't know what the tariff environment's going to be, so we can't tell you how much we're going to make or lose. They also suspended their share buyback, which, like, riddle me this: why is this company doing share buybacks? We bailed them out. Like, this should not, like, you should not be giving money to your shareholders when you got bailed out by the U.S. government twice. Like, I don't get this. That's like, good, they suspended their buyback, but GM shouldn't have had a buyback going in the first place. Like, there need to be laws against this shit. Or, like, massive amounts of taxation needs to occur on buybacks. Because the amount, just today, the amount of buybacks we're talking about between Facebook and Microsoft, it's like $20 billion of buybacks and dividends. And just two companies in one quarter. Like, that shit needs to be taxed. But yeah. Yeah, the big, like, GM, Ford, and Stellantis basically all said, we can't provide guidance right now because we don't know what the environment's going to be. And then, like, making things even worse is, like, in the United States, we're about to see store shelves that are completely empty. Because Walmart, Costco, Target, they all get stuff from China. All of them. And right now, they're just letting that stuff sit on a boat. They don't want to pay the tariff. So it's like, this is a self-inflicted recession done by the Trump administration, and with the advice of really, really stupid people who don't understand basic algebra. Conflating a trade deficit with tariffs is fundamentally flawed. It's like, you want to improve a trade deficit? Make something people want to pay you for. Offer a service people want to pay you for. And then it'll work itself out. But, like, this idea that we're gonna make iPhones in America, we're gonna make Nintendo Switch 2 in Ohio. Bitch, we don't make anything in Ohio. Ever. Like, we used to make steel here, but, like, acting like we're gonna make high technology things here in America. You can't even build an iPhone without parts that are made, like, the machine that makes the machine is made in China. The machine that makes the machine that makes the machine is made in China. The fourth order of machines made in China. It's like impossible. This idea that you could start a trade war with zero plan for how you're going to manufacture the things that you're putting tariffs on is just speaks to how stupid this government is and how stupid the world is becoming, but specifically how stupid Americans are that we voted for this idiot. It does sound like Putin in disguise. It does sound like Putin in disguise. It really does, man. Like, it's manipulative and bad, and it hurts the people. It's, and yes, it's destabilizing the global economy. Yeah, look, I'm not going to talk about why people voted for Trump. That's not what this is about. But it's that the side effect of people voting for this guy, it's adversely impacting the people who voted for him. Like, I live in Ohio. West of here, it's like cornfields as far as you can look. There's like this, there's this cornfield that I drive by, you know, on the way out to the pet cemetery that way. And there's this very prominently displayed 3 MAGA flags. Last time I went out there in April, after April 2nd, no flags to be seen. So, like, these soy farmers, the corn farmers of Ohio, they're getting super fucked. Between the U.S. aid, the repeal of these U.S. aid programs that bring starving people food from America, you can't ship that food out there anymore. And then, I don't know, have you heard of soy? You think Chinese people might like soy? They're not buying our soy anymore. Yeah, I know, the Google trend. Look, I'm not talking about why we got Trump. I'm saying that the side effect of this is going to hurt the very people who voted for him. And that's that whole fuck around, find out playing out, right? Like, it's nothing, there's nothing we can do about it. That's what's really frustrating and scary right now, is that we're just in it. And there's like, every day there's this headline risk. Something stupid could happen at any time. And if you go back to the Liberation Day press conference where Trump explains the tariffs and he shows you that equation that's just dumb. The Japanese delegation was here about a week ago, and they said we can't even negotiate a deal with them because they don't know what they want. We're negotiating. We're like, the U.S. government has created problems with our allies, and our allies don't even know how to respond because the premise is so fucking stupid. Like, it's really fucked up. But in this environment, yeah, like, find those safe havens. Nintendo's one of them for me right now. But it's only safe until it's not, right? And that's the concern. And yeah, owning real property is not a bad thing right now. Owning real estate's not a bad thing right now. If we are about to experience hyperinflation in the United States, real estate's a good thing to own. But yeah, what a mess. What an absolute shit show mess. So yeah, as always, I tell people to manage their risk. That's more important now than ever. If you're using margin, don't. This is not a time to be using borrowed money to buy stocks or options. I've seen a lot of people get blown to smithereens doing that. So yeah, just be careful out there. And it's, I hope things improve. I hope that we see more reversals of the economic policies of the Trump administration, but I'm not counting on it. Not going to count on it. So that'll do it. Man, what a long episode. Thank you guys for watching. You should follow us on all these places. We have so much content in so many places, and it's all so great. We're on YouTube. We have a website. I don't know if we have Shack Maps as a call to action yet, but we have shackmaps.com for all your interactive gaming map needs. Then we got Shack Pets. We got Bubbletron, maybe? No? Bubble? Yeah. Yeah. So we got all sorts of ways to support Shacknews. Thanks for tuning in, everyone. This will go up as a VOD. I don't know, Greg, should we break it up? Like, do the Facebook conference call in the middle, like cut that out, and then maybe put my intro and my ending as like a separate video? I can do it. I recorded it, Greg, so I can do that. Okay, you can do it. If you can do it, you can do it. Cool. So yeah. No questions? I must have done such a good job on the show that I left you guys with no questions. What a good streamer I am. So yeah, here's Apple after hours. We'll leave you with that. This news broke like right here. The stock fell from 210 down into the 209 area. Not that big of a drop. But yeah, it's disappointing to hear that Tim Cook and the executive team at Apple are doing more to preserve their antitrust monopoly than to actually improve their company. So yeah, shout out to Epic Games for fighting Apple on this stuff. That's not an easy thing to do. Like, Epic Games is the little guy in that scenario. Yes, Epic Games is a billion-dollar company, but what they're doing, trying to free the App Store, yeah, shareholders do like corrupt companies, that's for sure. But when you commit fraud, or when you perjure yourself, that's a little bit too far for even corporate greed, Scanner. Because that's jail. If you perjure yourself. So we don't encourage that here. Apple is not what it used to be. This is a big, evil company now compared to the days where they were the little scrappy one trying to fight Microsoft. But yeah, that's going to do it. thanks for watching, everyone. All these places. You can follow me there. You follow me on Twitter. Don't follow me on Twitter. Just don't use Twitter. Don't follow me on Twitter. But yeah, if you are on those places, we're on those places too. You can get vertical video content shoved in your face on various platforms, or you can see our articles on Twitter if by some miracle we show up on your timeline. That'll do it. Thanks for watching. As always, manage your risk. And I'll see you next time, Friday, May 30th. And that'll be after Nintendo's earnings. So I'll have even more to say. They're going to provide us their full year guidance. I think it's in a week or so. So that'll be something to watch for here at the Shacknews ecosystem. We'll be covering it on the website. We'll be covering it on videos all over the place. So thanks for watching, everyone. I'm Asif Khan. I'll see you next time. Bye-bye.